Hello everyone, we are the USST11. Here's Kunbo. I'm the team leader.
Here's Pei.
Our aim is to achieve long-term capital growth through active investment. It's assumed that the investment portfolio will pay $50,000 each year in the next few years for the impact proposal. If the average inflation rate remains at 2% in the long run, in order to maintain the purchasing power of the fund with 5% spending rate, the portfolio must generate a long-term return greater than 7%. This is our return objective. We have a long time horizon. The relatively long time horizon calls for an above average risk tolerance. In terms of strategic asset allocation, 30% of our fund will be invested in value stock, 60% will be invested in growth stock, and 10% cash will be kept for buying stocks during dips. 20% to 30% of the fund will be invested in ESG stocks. In the short term, tactical asset allocation may be performed to capture excess returns from market imperfections. The portfolio will be reviewed once a week. It will be adjusted periodically depending on its performance and changes in capital market expectations. We use bottom-up approach to select stocks. For value stock, our team looked for undervalued companies with strong fundamentals. For growth stock, we use GARP strategy. And most of the stocks we invested in were large caps because they have better information disclosure and transparency than smaller companies. PE, EV, EBITDA, and other models were used to value the stock. We had used SWOT and Michael Porter's 5 forces to identify the competitive position of a company in its industry. We also use PESTEL to analyze how political, economic, and other factors influence a company's performance.
The Federal Reserve is likely to reduce the federal fund rate sometimes in 2025. Depending on inflation and economic growth, the U.S. administration's broad-based tariffs have large impact on the stock market. Tariffs increase uncertainty. Due to short-term market volatility, our team maintained a lower position in equity in the short run than required by our strategic asset allocation. The maximum investment in a security is 10% of the entire portfolio. The maximum investment in the sector is 30% of entire portfolio. We have purchased 16 different stocks during this trading competition. They come from different sectors. Our low position in April helped us maintain the positive return from the stocks markets. We bested the Standards and the Poor 500 index during this period. However, our portfolio underperformed the Standards and Poor 500 index when the stock market rebounded in May. Our portfolio gained 2.98% as of July 3rd. The main contributors to our performance have been NVIDIA, Microsoft, Amazon, Apple, and Brookfield Renewable.
Our team developed the improvement plan for garbage classification. Thus, our focus was given to companies dedicated to environmental protection and sustainable growth. When selecting ESG stocks, we screen stocks based on MSCI ESG rating first. Companies with strong ESG performance relative to peers were preferred. These companies include Microsoft, NVIDIA, Apple, and etc. Then we analyzed whether they were undervalued stocks or growth stocks at a reasonable price. For example, Brookfield Renewable was regarded as undervalued and became one of the stocks in our portfolio. Since our purchase in late May, our investment in Brookfield Renewable has yielded more than 12% return.
Brookfield Renewable is one of the largest operators and developers of renewable power in the world. Brookfield Renewable holds an MSCI ESG rating of AA, ranking among the top performers in the global renewable energy sector. The company has a clear net zero target. The company makes ESG disclosure at project level regularly. The revenue is projected to double in 2025 and the EPS is expected to turn positive. Brookfield Renewable has a low PS ratio. The dividend yield was 5.78%. Our analysis suggests that the Brookfield Renewable is trading below the intrinsic value.
NVIDIA has constantly held the highest rating from MSCI, reflecting its strong ESG practice. It's active in carbon offset programs and sustainable supply chain efforts. So it's expected that NVIDIA's revenue and earnings per share will increase by 55% in 2025, and the EPS is likely to increase by 30% in 2026. So the AI boom created insatiable demand for NVIDIA's high-performance GPUs. Although NVIDIA has high PE ratio and PS ratio, the fast revenue growth and high profit margin have made NVIDIA one of the best performing stocks.
Microsoft holds an MSCI ESG rating of AAA. It's a global leader in ESG. It's committed to 100% renewable energy for operations by 2025. Microsoft reported 3Q FY25 results. Revenue was up 13.3% year over year, better than the Bloomberg consensus estimates. It was mainly driven by the growth in intelligence cloud and more personal computing segments. Microsoft generated enough cash to fund its capital expenditure requirements. It continually pays dividends and repurchase its shares to reward investors. Although Microsoft had high PE ratio and PS ratio, the stable growth in revenue and net income made it a good choice for long-term investments.
We have learned that risk control is essential for minimizing downside risks while optimizing returns. If we could go back to the beginning of May, we would have increased the equity position to at least 80% of the portfolio.
We developed the improvement plan of garbage classification. We will organize the wasting sorting workshops in the community and distribute wasting sorting guide to community residents. There will be regular inspections by volunteers with follow-up for incorrect sorting. Our budget includes facility cost, promotion cost, and labor costs. And this is our timeline. We will establish a partnership with the community center and find a volunteer first. We also expect there will be 20% reduction in the amount of mixed waste.
If awarded additional funds, we will replicate our project in more communities. We want to foster an environmentally conscious community. If you are interested in our improvement plan, please join us. Thank you for watching.